Hi everybody, so I'm making this video in response to Henry W Steele's excellent series on using Gann and little known tools on financial markets charts. And this particular video, I take a stock here is IBM daily chart, and I'm going to apply the, what I've done previously actually a few days ago, several days ago, is I applied the Pitchfork technique that Henry Steele recommended having a look at. That's a new way of utilizing the Alan Andrews Pitchfork, and I've also done some other kind of Gann studies on this chart as follows. So the first thing I've done is I've measured the high level here down to the low here, and I've worked out how many points that was, and I've converted that into an equivalent amount of time. And that's what you can see with these turquoise lines. We've got 0, that's sort of 1 unit of time, that's 2 units, that's 3 units, and that's 4 units of time that are equivalent to the number of points moved in this high to low, which is the biggest high to low swing you can see on the chart. The reason I've done a multiple of 4 is simply because we're further on in time than just this sort of 1 and this sort of 2 here. 4 splits nicely into 1, 2, 3, 4, 5, 6, 7, 8, or 8 after the 0 lines. What we've got there is kind of 4 sequences of time that corresponds to the number of points which the price moved from this high to this low. The second thing I've then done is I've drawn a straight line, diagonal line rather, from that high, and this is the green line now, from that high to the low, but forward in time to that endpoint of that fourth multiple of the time-based end time that's based on the price, if that makes sense. And I've then started to just divide that rectangle up into sort of half and a quarter and an eighth and so on, just to get some further kind of quasi-Gann lines that run through the data. So that's the first 2 things I've done. So just to recap, I've worked out how many points was it from the high to the low, and I've converted that, I think, into either hours or days or something, into hours I expect. And then I've drawn a using the Fibonacci time tool, I've then drawn in, well, to get from 0 to 1, that is the number of hours, I think it is, that are equivalent to the number of points that were dropped here, something along those lines. It may actually be the number of days. I think it's the number of days actually. So what have we got? We've got kind of like 90 as the low there, and 158, so that suggests sort of like 68 days roughly. So from here to here, as you can see, that's sort of 68 days. So again, so 68 days, and then another 68 days, another 68, and another 68. Now what's really interesting here is that we then can draw a diagonal. We can draw a number of diagonals. We could draw a diagonal directly from the 0 down to the 1. So that would look like kind of this, but I felt that was a very steep line to draw, but we can do that just down to, so if we go down to the low here, that would be a valid kind of Gann square type line. But I felt that was very, very steep. So what I did was I just drew a diagonal line from this high down to the low level here, but at that fourth multiple of the time price hypothesized sort of endpoint. And what's quite interesting about that is we can then draw off a rectangle, which I haven't done, but you can imagine that there's a rectangle that goes along here, down this y-axis, and all the way along here. And we can start saying, well, what's the halfway point of this right hand side of the rectangle here? And then it turns out that I think this point here where the red line's drawn through, that's the halfway point. between the bottom here. So if we actually draw a horizontal line up, quite conveniently in this tool, that kind of square, you can see the white square, that's exactly halfway. So this kind of splits that rectangle in half again and gives another resistance line. So I drew that in as well. And also I drew in, and I split it in half again to the and again to sort of have further potential lines of sort of support and resistance. Now bear in mind we were at this point here when I drew this. So ignoring the rest of what's happened on the chart, I was about here, and I was thinking this is probably a good time to short, and I'll tell you why I thought it was a good time to short IBM. So this is where we now move on to the Pitchforks. So just note as well, I've also drawn in some Fibonacci retracements lines here, just from this low here to what was this high right here. That was just to give an idea of where, if we were short, where price sort of might want to retrace to in terms of potential targets on the way down here. Now what I've done, another thing to notice is there are lots of gaps on this chart, a lot of gaps. IBM seems to trade with a lot of gaps, so that's interesting. So what I did from there was I just drew one of these Henry Steele pitchforks, and Henry Steele recommends that you draw these, say, from a pivot point O. So this would be kind of pivot O, and then this would, well, let's just start off with a traditional pitchfork actually. So a traditional pitchfork would say we've got pivot 0 here, and that's pivot 0. Then we need a pivot 1, which is, say, here. Actually, pivot 1 occurs down here, doesn't it? So this becomes pivot 1, and then pivot 2, which we've lost. I'm going to have to redraw that. So we end up with pivot 0. That's going to be pivot 2, and then this down here is pivot 1. So what Henry Steele recommends is that you actually just shift the pivot that's further back along in time to the second pivot. So that would be here. But as you can see, that's far too steep. So I started thinking, well, what's some of the things that we sometimes do with a traditional pitchfork? Well, we might think of a shift kind of pitchfork, and maybe with a kind of a floating pivot in the middle of this, between these two highs maybe, and just draw in the line, just drawing the lines like that. So that becomes your anchor, and then you've got point 1, and then all the way down point 2. But because of the steepness of this move, we end up with an extremely steep pitchfork, which isn't necessarily that helpful. We'll put it on though, because it may be that the extensions of the pitchfork were useful. So I'm just going to tone that down a little bit in both colour and how thick it is. So we just end up with those kind of lines there. And so that is kind of a bit more of a traditional kind of pitchfork. It's maybe a so-called either a shift or even a T pitchfork. So it needs to be there. So you can see it's even steeper than we'd imagined. Again, pretty unhelpful when it's that steep in my view, so not very useful. So I thought, well, what happens if we actually just use a pivot that's an alternative pivot, which is, say, about 50% of the way down this high to low move, and it happens that the 50% is right on to the pip, almost a point where the price bounced and then acted as resistance. So I decided to use this this as the anchor point for this Henry Steele type of pivot the new style that's been introduced, and so that becomes pivot 0, and then we've got kind of a pivot point here, and where have I drawn it now? I can't see. Okay, so actually what we've got there is it starts off like this, right? That's kind of like the way the pitchfork starts off, but we move that along to here, and then the underside of the pitchfork is down at the low. So that's the low, the earlier low, and then we have the high that's here, and we've just shifted it along in time. And I've shifted it along there to the 2.5 area. And the reason I think I used that 2.5 area, I can't remember exactly right now, possibly because this had a high at the same level, I'm not sure if it did, but you've got kind of quite a good encapsulation here of the price action, with a nice bounce off this level here, which looks like it's the kind of 25% of the way down. I'm going to try and get rid of some of the noise now that's on this chart, just so that it kind of becomes a bit clearer. So if we lose that Fibonacci, and we sort of, that's the midline there that I said we'd anchored off, and then this is kind of I'm not sure what that horizontal line is there for. There's probably a reason for it at the time. I think it might just be where I anchored that pitchfork. Oh, it's this low, this secondary low here. So I think we'll just get rid of that. Just for now, just unclutter the chart slightly. Is there anything else we can unclutter? Well, I'll take this off and then we'll draw that in again. So that's another pitchfork there. So I'm going to just remove that for now. So all we've got then is these time-based reversal lines, potential reversal lines in time. We've also got this new form of pitchfork here that's been dragged along from this high along to here, which was the next sort of another sort of significant high by the look of it, sort of a less important pivot, but still a pivot point. And now I'm thinking, well, this has held really well, this kind of 25% line or whatever it is. Yes, 25% line of the pitchfork. The median line itself has acted as a line of symmetry a little bit around here, and it's acted as a nice little pivot right there. And then we've got a bit of symmetry going on around here. We've zoomed through this, but it held a little bit here, and then we've got some resistance and then some breakout behavior towards the upper line. So I'm actually thinking around here, let's sell, and I decided that because of this high here and this high here, a good place to put the stop loss would be just a few points above the this line here. So that's what, about 4 or 5 pips, 5 pips above, 5 points, or 50 cents, 5 cents. Let's see. So we're talking about 52 cents, 52 cents above this high right here. Now I have to admit, I wasn't expecting the price to actually get as high above this line here as it actually did, and it came very, very close to the intended stop, which wasn't expected. I would have thought this was going to get taken out actually, but in fact what happened is that the short idea was correct, and there's this huge gap down back to the 50% of the steel pitchfork, which I just think is fascinating. I just think it's really interesting. It was a good trade idea. The stop was in exactly the right place, and then we had this huge gap down. So the other thing that I did was I drew in a more of a standard pitchfork using, I think it was this pivot here, and then kind of connecting up to here, I think it was. And that was actually to find some sort of points of potential confluence. And you can see that the crossing over of the timeline and the two pitchforks that we've drawn in there is almost exactly where that gap ended up. I just think that's quite interesting. I don't want to kind of get all pareidolia about this, looking for patterns where they're not, but this was a useful framework that was presented in the video by Henry Steele that I applied, found a really great trade that's that's actually done very, very well, in spite of almost reaching the stop that was put in place. As I say, when I drew this chart, it was around about here. So another reason that the short I thought might come into play was that we'd hit that 2.5 time level as well. And sort of we were also, really importantly, this midline red line, or this red line that was drawn through, also seemed to be acting as kind of a symmetry at the time. So it could have been a turning point, and was. Nothing else really to say about that. I recognise it's quite a complex kind of spaghetti junction chart, but I hope you can sort of see what the thinking was around this. I just think it's a really interesting novel application of the pitchfork that Henry has shared with us.